Hello, my name is Tim Tyler, and I'm here today to dive deeper into embedded banking, opportunity beyond your core. As the world looks at moving beyond banks, is now the time for financial institutions to look at themselves in the mirror of self-reflection and ask themselves what their reason for being is, their underlying purpose, and how they expect that to change over the coming years. In an ever-changing world, what even is a bank? What does it mean? Who are their customers and what are their demands? To help unpack some of the challenges and hopefully opportunities, I'm really pleased to be joined by Dr. Hussam Abu El Dahab, a FinTech advisor for FinTech Hub. Dr. Hussam, it's wonderful to meet you and thank you for taking the time today.
Thank you, Tim. It's my pleasure and thank you so much for having me today in this webinar.
Yeah, look, I thought, as would make sense, if we start at the beginning. And the beginning for me for this is even the definition of embedded banking. I have a picture in my mind of what I believe it is, but I'm interested to hear from you what your understanding, what you believe embedded banking to be.
Simply, you can say that the embedded banking, it is some sort of integration of the financial services into different business models or non-financial focused business models. You can also say it is like a new different showroom for the financial services to offer and sell the financial services, but in a different way.
Yeah, I like that actually. And it is about selling maybe existing propositions in a different way. When we look at financial institutions, whether they be banks, whether they be new entities that are coming through, do we also have to be conscious of what embedded banking is not, or can we just assume that the changes that are taking place, we're not going to fall over ourselves if we get this wrong, in other words?
A very interesting question, actually. It depends on the question is for whom. If it is for the customer, I shouldn't consider or even understand what is behind the service being running for the time being. But for sure, it is very important to focus on this problem when I'm a financial service provider or even non-financial service provider. From the customer point of view, I'm just using my service. So I'm care about the non-financial service itself, because this is the reason that I came to the non-financial service, not the financial service. But from the other side, which is a financial service provider or even the third party that offering the non-financial service, it is very important to understand what is the boundaries between what I'm doing and what is the financial service provider doing. For the financial service providing, he is offering the financial service just to complete the business model of the third party. So it is not the good position to compete with them and even to just be a breaker of the business of these guys. From the non-financial service provider, like any products, transportation, grocery, any other services, my boundaries is the non-financial services. So I cannot compete with the bank because it is not my business. I cannot compete with the fintech company providing, for example, payment gateway. I'm just focusing on the product or the core product I'm offering for the customer.
Gosh, so much to unpack in that really quite fantastic answer, actually. I love that point about being aware of boundaries, but coming back to just the customer element for a moment, the brand plays an awful lot in this. And at the moment, customers who bank with what they know to be a bank. And that bank brings with it their brand as a bank, but also hopefully the security and the comfort of their license. Do you think consumers are actually that bothered these days? Do you think they might take more comfort in a brand that they regularly do business with, regardless of whether they've got a license for what they're doing? Is it even a consideration for consumers, do you think?
Let's say that the security, whenever we are provisioning a service on the digital world, the security becomes priority number one for the customers, because they keen to secure their money, their information, and the journey that they are taking to receive their service. So the customers, even if they are not putting it explicitly on the top of priorities, but emotionally they are taking care of the security of their information and their money as well. From the bank perspective, and I'm working in the banking sector, so I can say that security is far away in the priorities from other priorities. It came in the top of the priorities of the bank. Either they want this or force it by this, because any regulator worldwide are giving the top priority for the security. But if we're speaking about the third party, the brand, actually, emotionally, when I'm dealing with a well-known brand, I'm assuming that they take the priority of the security on the top of their priorities. I'm assuming that they did their homework to make me in a secure area that I'm not under attack, because sometimes the third party are putting the security in a lower priority and putting the customer as a victim for the fraudsters. So the brand, which is providing the non-financial service, and the bank, which is providing the banking service in the background, are mutually cooperating to secure their customer. And this is based on the mutual benefit, actually, because both of them, whenever the customer is consuming the non-financial service, it is implicitly bringing the profit to the banks. That's why they are working cooperatively to deliver the best service to the end customer, considering the security as a priority number one, as I mentioned.
And you mentioned as well, and I wrote down the phrase mutual benefit. I think in my mind, when we look at banking at the moment, for consumers in particular, so for retail customers, there's five key actions. I'm going to count this on my hand. There's you receive money, you send money, you borrow money, you save or protect your money, and so you want it to be secure, and you spend money. Do you think we're moving away from thinking at this basic level and picking up on another word you used in terms of emotion? Are we now considering more the wants, the desires, the outcomes, and packaging those transactional elements together to serve the outcome, rather than positioning those raw ingredients? If you, I guess, to use a very bad analogy, are we now positioning the meal rather than the ingredients?
Yeah. From the academic point of view, any transaction, it is some sort of moving money from the owner or the controller to another one, even if this is a temporary ownership of the money itself. It may be milliseconds or something like this. But when we are saying that saving money, sending money, paying money, it is all about money. But we are moving from the traditional product in the past, which is provisioned by the showroom of the bank itself, either from the physical branch or even from the digital channels, to the embedded finance. What is the embedded finance is offering here? It is changing the perception of offering the financial services. It is moving the mindset of, hey, I need this financial service, so I'm going to the bank to ask for a loan, for a lending, for insurance, for any financial service. No, I'm not doing this right now. When I'm purchasing my non-financial product, the financial product is just raised up when I need it. So I'm buying a computer through my mobile, and it comes at the end of the journey, which is I'm trying to pay, so I will use the financial service when I need it. When I'm purchasing, for example, it's not like a car, but something expensive, so I need to make insurance. I'm not going to the insurance company asking for insurance. Then I'm looking for which car I want to purchase. No, I'm buying the car, and at the time of finalizing the deal itself, and when it comes that I need the insurance service, it comes to my hand that I'm executing an insurance service. So this is the difference that the embedded finance, in addition to a lot of facilities it is providing, but it is changing the mindset that you will need the financial service at specific time, so you will get it. Not just offering it at any time. Sometimes I'm not needing this loan right now, so I will not giving any attention to this. But when you are offering the loan at the time that I need it, I will take care of this.
I agree. I think it's about the right products at the right point in the right journey. So to a great extent, it is about those outcomes, and it's also, to some extent, I guess, enabling not just the bank or the financial institution, but let's stick to the term, the brand, almost helping them to put their arms around you to support you on the journey that you're going, because you may not be thinking about these things, but being able to wrap those all up in a single packaged solution, if you like, is going to have a lot higher chance of success in terms of the bank or the brand selling that in. And do you think that's what this is about? This is the opportunity, if you will, to package those existing flows into more customer-oriented propositions, about bringing together the shopping bag of goods and making sure that you've got the right things in that bag at the right time, affording the opportunity for consumers, to buy, but also their inclination to buy is higher because we've timed it correctly.
Yes, sure. Actually, this type of packaging, sometimes I look at it like a marketing idea that it's not just something in the fintech or the financial services, but sometimes I look at this way of thinking like someone from the marketing world say, okay, I will get the customer, but using my way. You are looking for a customer shooting in the fly, but I will bring the customer to your table, and he is very interesting to purchase your product. This is one dimension. Another dimension, actually, the fintech have a lot of supporting technologies, concepts that empowering the idea of purchase the financial service just on time. Like, for example, if we're speaking about the open banking, for example, the open banking is extracting and sharing financial information from the bank or the financial institution and share it with the third parties that may be interesting with such type of data. Let's say that I'm going to purchase a car, and there is a third party have the showroom of the car. Imagine that someone's salary is $1K, for example, $1K monthly, and someone is offering him Rolls Royce, which is so expensive. But if he is offering another type of car that very consistent with my salary scale, I will listen to him. And maybe I was not planning to purchase the car this year, but when he is offering a very customized and very tailored product to my needs, it will make me more motivated to purchase this type of products. So the cooperation and the integration even between different technologies, different mindsets, it improving the way of packaging the products, either the financial or the non-financial products.
It's that bringing together. It makes me think of the transformation that manufacturing went through in terms of just in time, and it's that approach to just in time for the banking world, I guess, and that's what a lot of the architectural changes, if you like, have helped the industry adapt because of faster payments, a lot of the digitalization to enable better, faster credit decisioning to be made.
Sure.
Do you think that there's particular areas which are going to be providing the bigger opportunities for embedded banking? Or do you think that we're only scraping the surface at the moment, I guess, that there's a lot more opportunity to be mined?
Yes. Well, let's say that taking it from the numbers point of view first, one of the researchers are expecting that $230 billion will be the addition revenue coming from the embedded finance by 2025, which is a huge number. Actually, I was searching while discussing or thinking about the webinar. I searched about a country budget, and I found that this number is almost higher than 80% of the country's budget. You can imagine how much it is. So from the numbers, for sure, yes, there will be a growth. From the variety of the services itself, there is every day we can hear that there is a new line of business came to the landscape, and it will be a revenue generation stream. In the past, we were just speaking about the financial service. Then we are speaking about lending, micro lending. Then a lot of speaking about the NPL, purchase buy now and pay later, which is covering a lot of business lines actually. So you can buy home, car, computer, furniture, anything, and then you can pay it later. On the other hand, actually, I'm usually tell it the sky limit technologies. So when we are speaking about the open banking, it comes from the open APIs, application programming interface, which is opened a new world for the new business lines. When we are speaking about artificial intelligence, it is opening a new opportunities and a new horizon for investing in the fintech area. So there is a lot of new business lines are coming to pop up in the world, and even the current running ones, it will be more extendable because of the new mindsets offering new services. It wasn't on the ground before.
And you mentioned mindset there. Do you think banks are where they need to be ready for the opportunity, in as much as there's one side of the equation, which is the mindset of the people that are working within the industry, but then there's also the technologies that they've got available to build upon. Are they ready, do you think, or is there more work to be done?
I think there are 2 points we have to consider when we are speaking about something like this. The first one, it is a completely change in the agility mindset. when we are speaking about embedded finance, the first thing for me as an expert in this area, that whoever wants to join this game, you have to be agile. You have to deliver your service to the market in the shortest time. You have to respond to the changes in the shortest time, because if you didn't do that, another one will do it. This is from the mindset of the people offering the services itself. But also from the banking point of view, if we are focusing more in this area, the banks found that it is a very easy way to gain profit, because if I'm offering the financial services, I have to get on board a prestigious branch and hiring marketing team, sales team, operation, housekeeping, and electricity, air condition, and so on. But at the model of the embedded finance, I'm just giving integrated point or open the integration points at my end to the external world to collect money. Because at the end, I'm already owning my infrastructure, and after X years, I have to renovate my infrastructure and so on. So I'm just focusing on two things from my point of view: the scalability. As a bank, I have to consider the scalability, because at the beginning, I was just offering my services in my X number branches or showrooms. But now I'm expanding my showrooms to all third parties, which is expanding to thousands or maybe millions. If I'm working in the global area, I'm expanding my customers' numbers. So the scalability is number one. The second one is the operational effort, because I'm operating and serving X number of customers, but now I'm serving more and more customers. So I have to consider the smart way of operation. Rather than that, I'm very happy as a bank to work in the embedded finance.
It's look, even just picking up on those points there, it's scalability is so key, isn't it? Because embedded finance opens up the ability to go from a lower number of transactions, perhaps at a higher margin, into the high volume, low margin type business if you've got different channels to market. And when you're scaling, it's not just your technology, it's your people. How do you scale without a parallel curve in terms of people growth? You want to not have to take on board that number of people as well. But yes. Look,
also, I would like to amend something here. When we are speaking about the scalability, it will come back again to the technology, because here the technology, I have a technical background, so I'm very biased to the technical guys. As a technology provider, I see that there is a lot of technologies supporting the scalability and stability, the availability. There is a lot of technologies supporting this, especially the cloud computing, which is serving not just the scalability, but also the cost optimization. You can imagine that I may purchase a server box with 10K of euros, and I'm just running 100 transactions. But in the clouding world, I will pay just for the infrastructure to run the 100 transaction. You can imagine that I'm just paying for what I'm using, not just what I'm purchasing.
Yeah, I think elasticity is very key in terms of, as you say, start small, allow that to grow, allow that to stretch, allow it to stretch on demand and shrink back in between as well, I think is really key. But look, Dr. Sam, I think unfortunately we're out of time now, but I'd like to thank you again for taking that time to join me to talk about embedded banking and the insight that you've shared. I think it's apparent that there are opportunities worth the investment in overcoming the challenges, whether it is that scalability, whether it's the openness that's needed, the API ability, whether it's the mindset and having that agility mindset, as you said, but definitely worth investing in it to overcome those challenges. And this diversification, I think, isn't just about spreading into new industries, rather it's about enabling financial institutions to leverage what they already have. Some of those capabilities, those types of transactions, the business they already operate in, but using them to build new propositions. And I think in a world of disintermediation, attack is, after all, the best form of defense. So again, Dr. Hassan, it's been a pleasure. Thank you very much. And for those listening, thank you for taking the time as well. Good to see you. Bye-bye.
Thank you so much. Bye.